Hello investors, welcome to Investor Central. In this video, we are going to understand the complete details of a mutual fund with highest assets under its management in India. And the fund we are talking about is HDFC Midcap Opportunities Fund. So proceeding further, a small disclaimer. This video is made for educational purpose to make investors aware about the details of this fund. No more delay, let us check out the basic details of this fund right away. The fund has NAV of 164.65 rupees in direct mode and NAV of 150.94 in regular mode of investments. Why I am saying NAVs of direct mode and regular mode separately, you will know shortly. This fund is incepted on June 25th, 2007 and managed by Mr. Chirag Setalvad, as you are seeing in the screen, since its inception from 2007, means since last 17 years. By this, we can understand the expertise and stability proven by this fund since many years. Now let us check an interesting topic that is regarding the charges of this fund. If we see here, there are two modes of investments to invest in this fund. One is regular and another one is direct. Also, we can observe that NAV of any mutual fund in regular mode, that is the price of mutual fund in regular mode, is always lower than the price of mutual fund in direct mode. In case of this fund also, we can see that NAV of HDFC Midcap Opportunities Fund in regular mode is 150.94 and the NAV of the same fund in direct mode is 164.65. Why the difference when they are launched together at an NAV of rupees 10 during their inception? Here is the answer. In regular mode, we pay two charges, one to the distributor and one to the AMC. So in direct mode, we pay only one charge, that is AMC expenses or charges. So the remaining distributor fee is added to the returns in direct mode of investments. Thus, NAV or the price of a mutual fund in direct mode is always higher than NAV or price of the investment in regular mode. Quick bite here. If we have invested just rupees 6.1 lakh in this fund in 2007, today its value is 1 crore rupees. Now let us check the portfolio and asset allocation of this fund. Currently, this fund has invested 93.21% in equities and 6.79% in cash or liquid assets. Out of that 93.21% investment in equities, 57% is invested in mid-cap stocks, 36% is invested in mid to large cap stocks, and 7% allocation is given to small caps. Coming to the sectoral split of the portfolio, financials, capital goods, healthcare, technology, and services sectors are the top 5 in the portfolio. These 5 sectors contribute about 61.33% of the total exposure. The best part is top 5 stocks allocation of total 69 stocks in the portfolio is only 16.78% and allocation to top 10 stocks is only 30.5%. So even the top portion, like the top order, did not perform well. The middle and last portions of the portfolio also can push the returns of the fund, as their exposure is also up to 70% in the portfolio, which is good thing on the part of diversification. Another interesting thing here is the stock with highest exposure in this fund is Indian hotels, with a small exposure of 3.68%. Yes, this is the stock with highest exposure in this fund, and the highest exposure is 3.68%. Coming to the check on returns, HDFC Midcap Opportunities Fund has made money for their investors for sure. But its benchmark, that is S&P BSE 150 TRI, that is total return index, beat the returns of this fund 5 times out of 6 time frames with a very mild margins. As we can see here, only during the period of 3 years time frame, this fund has made a return of 31.41%, which is more than its index. Example means an ETF with far lesser expense ratio could have beaten the returns given by this fund. But just returns are not the only factor to decide whether a fund is good or bad. There are risk parameters also. Let us see how the fund is performing in risk management of the portfolio. Here we can observe that the standard deviation of this fund is lower than its index, which is extremely good. That means the fund is selecting lower volatile stocks and trying to make returns for its investors, which can be seen in Sharpe ratio at 1.68. While its index has a Sharpe ratio of 1.5, this fund has Sharpe ratio at 1.68. So Sharpe ratio tells us the risk adjusted return. How much return we are making for the risk taken. So for the risk taken by the fund is successfully able to provide more returns than its index. And beta of this fund is also lower at 0.91, also maintaining a good alpha. Thus, these are the complete details of this fund, and let us check out the key highlights of the fund. Coming to the key highlights of the fund. This fund has highest AUM in India, followed by Parag Parikh FlexiCap with a very thin margin. This fund has efficient management since 2007, that is from the last 17 years, and has wide diversification by investing across sectors and hold a decent number of stocks at 69. And the fund has lower volatility than its index. Thanks for watching the video till the end. If you like the video, please hit the like button, share and subscribe to our channel. Catch you on next video. See you. Bye.